Alright guys, here's a review of the live trading room on the 14th of February. So the analysis, of course, just goes over really what we're looking in the market and a heads up as to what we're going to trade in the live session. These are delivered into these reports are delivered into the room 15 minutes before the market even opens. So you know pretty much what we're going to be trading once the market opens, and of course we know that we're going to be active in the room for about half an hour. So top part of the report is just really talking about the fact that we're in a long-term trade. Sometimes we do long-term trades, and the trades we were looking at today were we'd seen this correction the day before on the 13th of February, and as a result of that I now expected range-bound action between 7,500 to 7,380. Okay, so I'm expecting the market just to really bob around in that area. With that in mind, we can look to buy near 7,380 to 7,350 with targets at 7,500, stop below 7,300. We can also sell near 7,500 with targets at 7,450, stop above 7,550. Valid all day and into the American session too. Note that some of our trades are not valid once America opens. So if it hasn't triggered by the time America opens, then you would cancel your order. So these are really just sort of trades you can put into your platform, your broker platform, and set and forget. Short-term direction, we're still positive, and long-term direction, still very positive. 5-minute bar, these are our system trades. So the 5-minute bar, we were going to confirm in the live room. Spikes, now because we're range bound, I kind of was happy to buy or sell the market on Friday the 14th of February. So I was saying a spike up is okay to sell if we see a spike of 20 points or more. Also, a spike down is okay, 20 points or more, with a stop of 21 points. So either way for that system trade. Closing gap likely to fill, that's the previous day's closing price on the market. And the swing trade, that's basically a long-term trade, which is mentioned here. It's already in motion. So actually on the day, this was the system trade that triggered. We didn't do the 5-minute bar. Closing gap, we opened pretty much on the closing gap, so there wasn't a trade there. So this is the one right here that that we were going to pay attention to and did trigger. So let's go and look at the market action for that particular trade. That again, traders were aware they were likely to get to do this trade even before the market opened. All right, so this is the opening. This is the opening 5-minute bar. So it's the first 5 minutes after the open. We can see that the open price was 55. So basically, what we did is we bought the spike down at 74.36, which was part of the trade plan. So it spiked down here, we just bought it blind, and we were going to have a 21 point stop on that one. So our stop was basically 74.15 down here, 74.15, which was there. But as the market moved down, the price action had no retrace. So what I said was actually I changed our trade as it was moving down. I said take out the stop, and actually we're going to add another buy. I don't usually add to, this was clearly a losing position once we were down here, but it's very rare to see such a big spike. This is almost 5-day ETR move in a very, very short period of time with no retrace. So I actually, instead of just getting stopped out on the lows, I said remove the stop, and I said buy again at 74.17, which is what we did. And we were going to have a stop for both positions, the first position and the second position, below 7,400. So basically down here. And so we bought, and then the market moves up, and we closed our first position out here. So close that out, and we let this particular trade run, and at 74.17, and really I just said, look, you can either once we're up here, I said either move your stop to entry or take half profits and pay for a stop below the lows. So if you're if you're down here at 74.17, then you've got a stop of around 20 points. If you get up to 74.27, then you've basically, and you take half profits, you've locked in 20 points on half your position, and the other remainder of the half the position, you use the money you've made to pay for a stop 20 points below your entry. So that was the thinking behind that. And I said basically you could run the rest of the trade up to 7.445, which actually just missed here, then came back down again and came up and hit it. But actually I was at the charts and I saw it just miss, and I got out myself around 7.442. So so that was the nice winning trade on the spike system trade on Friday, and that's how we used different types of risk management there to control the trade.